So we have a great video to share with you in regards to a Forex scalping strategy that can be used on a 1 minute or 5 minute time frame. And I love doing these videos because we are showing you how you can be a profitable trader by keeping things as simple as possible. Now with this particular scalping setup, I'm going to show you how we capitalize about 200 pips in profit, which of course is way higher than most traditional scalpers even target. But I want to be showing you a trick or a method of managing your trades that you could apply to your trading, allowing you to hold on to your trades longer for larger profits. As we do with all of our videos, we'll share with you our live trading footage, trade entries, review the results, more importantly, break down our strategy so that way you can apply it to your trading. Like and subscribe if you enjoyed today's content, and let's hop in the charts. If you have any questions or need help, feel free to comment down below. You can also reach me more directly, either via email or Telegram. You can access all of my official contact information down below in the video description. And while you're down there, don't forget to check out our trading resources provided, ranging from links to free demo accounts and brokers and properties that I personally use, information of our trading community, our VIP signals group so you can follow and copy my own personal trades, auto trading for passive daily profits, and much more. Again, all of that can be found down below. So our main focus for today's strategy is a buy entry we had taken for gold at 27.24. Now, as a trader, whenever you're about to take a trade, you should always be able to answer why you are taking that trade. Remember, trading is all about probabilities. You have two options to either buy or sell. So from there, you have a 50-50 chance, but you can increase those chances to your favor by looking for market confluences to support whether you think price is going to go up or down. And by doing that, you are increasing the probability of that trade going in your favor. Now, in this case, we're taking a buy because we believe price is going to go up. And what I love about this strategy is that it focuses on trends, specifically following the trend, and then we're just looking for a break and retest of a level. This is actually something we went into more detail in our market structure video. If you haven't seen that, I'll leave the link down below in the video description. So with that said, why do we take a buy for gold at 27.24? Well, regardless if you're trading off of a 1 minute, 5 minute as a scalper, or maybe you're an intraday or swing trader, it's important that you're mindful of what's going on in higher time frames. Now, looking at the current trend, we can see price is bullish, right? Price is going up, creating higher highs and higher lows. So since we're in a buyer's market, we're looking for buy trades, right? We're following the trend. If you're in a buyer's market, you're looking for buy trades. If you're in your seller's market, then you look for sell trades. And what I love about structure, ladies and gentlemen, okay, take a look at this. What I love about structure, in this case, the properties of an uptrend is we have a higher high, higher low, higher high, higher low, higher low, and so on, right? Is that market structure leaves clues as to what price could potentially do next. For example, we have a higher high, which is a level of resistance before a retracement, followed by a higher low where a level of support is created before price continues in its original trend trajectory. So as price is rising, we have a break of structure where price is closing and rising above our previous higher high level until eventually creating a new higher high. Then we have a retracement creating a new higher low. And here's the beauty of this, folks. This support created by this higher low is complemented by a prior level of resistance from the previous higher high. So what was resistance now serving as support. And as we know, we sell at levels of resistance and we buy at levels of support. So if we're in an uptrend only looking for buys, where should we be buying? At these lower points. And then the pattern repeats itself. Price continues upward, breaking the previous structure, then creating a new higher high, retracing to a new higher low, and then repeating the same cycle. What was resistance from the previous higher high, now serving as support from the new higher low. Which brings us to our entry point where price came up, broke structure from the previous higher high, creating a new higher high, and then we have the retracement where our new level of support is complemented by the previous resistance. And this is where we're getting to our point of entry, where our new level of support is complemented by the prior resistance. So coming back to the lower time frames, what we have here, folks, is a break and retest. Price broke through our resistance, retraced back down, retesting this level, what was prior resistance, now serving as support. Now, as a scalper, this is more than enough to enter for buy positions for the fact that price is now closing above our support. But again, in terms of probability and increasing our probabilities I want to identify another level of confluence possible, and that is where the RSI comes into play. As you know, folks, I love the RSI. The RSI is a very powerful tool, not for the traditional sense of overbought and oversold, but specifically for divergences. And in this case, we have a classic example of a bullish divergence. We have price creating lower lows, while at the same time, the RSI is creating higher lows. Two opposite forms of structure between the market and our RSI, indicating bullish momentum. And when you have a level of divergence complemented by a level of support resistance, and that level is respected, this is a great opportunity for a possible entry. Now, if you wanted to take it a step further, you can also, go on a slightly higher time frame like the 15 and whip out the Fibonacci retracement tool. So if we start from the bottom of the impulse move to the very peak, not only do we have a confirmed bullish divergence on the 15-minute time frame, the divergence also correlates or is complemented by the golden pocket ratio of the Fibonacci retracement tool. So as you can see from the live footage, as a result of all these confluences, this is why we took our buy entry at 27.24, and as price progressed, price hit our take profit target at 27.45 for a profit of over $4,000 for each position for a 200 pip move. Now, granted, when it comes to traditional scalping, 200 pip move is pretty substantial. It's not really that common. Most scalpers like to target anywhere from 30 to 100 pips. So why did I target 27.45 as my take profit target, even though we're scalping on a 5-minute time frame? Well, for a couple of reasons. One, if we look at the higher time frames, we can see that from our point of entry, our nearest level of resistance was in this area around 27.49, 27.50 from November of 2024. So because we had all this open space, this opened up our buy trade to reach those higher levels. But coming back to the 5-minute time frame, the other reason why is because of our trend line that we drew, connecting your two most recent pivot points. And as long as price remains above your trend line, you hold the trade. Once price closes below your trend line, you close the trade because that could signify a potential trend reversal. As you can see, we had a couple of wicks here in the lower level where price kind of wicked down below, but it didn't close below our trend line, which is why we held, and as a result, price eventually hit our take profit target. This is a great method that you can apply for holding onto your trades longer for larger profit gains. By the way, this is also a trade we called out for our members and students within our VIP. I love to show these in my videos because, for one, is to add a little bit of transparency to show you this isn't a cherry-picked area of the market that I'm using to show you how a strategy works. It's to show you that, for one, these are trades that I personally take, which is why I share with you my live trading footage, but to also show you that these are trading ideas that we also share within our community, which for our students who took this trade, were also able to capitalize 200 pips and more in profit. Step 1, identify the trend. It's bullish, so we're looking for buy trades. Step 2, wait for the break and retest. Here we had the break of structure where price came up, retested this level, what was prior resistance, now serving as support. Step 3, we identified the bullish divergence complemented by a level of support. And as a bonus, you can use the Fibonacci retracement tool to see if your levels complement with the golden pocket zone. When you have those confluences, wait for price to close above your support and enter for the buy. Trading can be overwhelming because there's so much information out there in regards to more advanced techniques. Those are elements that you can implement to your trading as your skills improve. But until then, just keep it simple. And you can see that just by simplifying your trading approach, you can make money in these markets. This is one of the many concepts that I teach within our trading group, alongside with dedicated modules on my own personal strategies on how I trade gold, as I shared with you today, allowing beginners and struggling traders to make money as they are learning and improving on their trading skills. So if you want to learn more about our trading group and our VIP trading room, you can visit our website or click the links down below in the video description.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.